Hey, welcome back to the Mining Pod. It is Friday morning. If you're listening to this, we're going through this week's Bitcoin and Bitcoin mining news, along with my co-host, Matt Kimmel of CoinShares. Back to you in a minute after a word from our sponsors. Hey, listeners, let's talk about revolutionizing your mining operation with Foreman. This isn't your average management tool. It's an all-in-one solution for reducing costs and significantly boosting your revenue. Foreman brings a cutting-edge dashboard to your fingertips, empowering you with automated energy strategies. This means not only curtailing around real-time prices, but also strategically enhancing your profit margins through demand response. It's about leveraging energy efficiency to its fullest potential. With Foreman, you get a system that scales with your business, inventory management for assets, infrastructure integration, and business intelligence. Foreman elevates the cash flow and production of your entire operation. To see how Foreman can redefine your mining operation standards, visit foreman.mn. With Foreman, you're not just managing a mining operation, you're setting a new standard in the industry.
Are you a retail or institutional investor interested in Bitcoin mining companies? The Miner Mag brings you free data and analysis from all major NASDAQ-listed Bitcoin mining operations to know who stands out. Check out visualized metrics and data-dependent stories at theminermag.com.
Okay, welcome back to the Mining Pod. We have our news roundup today. We do this every week. We go through Bitcoin and Bitcoin mining news, the important stories that happen throughout the week that you might have missed or you want a little more color on. So we're going through that along with my co-host, as always, Matt Kimmel. Charlie Spears is off this week. He's on vacation, so we'll see Charlie maybe again next week. Matt, how you doing?
I'm doing well. Ready to chat news.
You're battling a cold, so for the audience, have a little for our friend Matt. You know, he's week in, week out, he's giving you the good stuff, but this week he's a little tired, he's a little groggy, maybe a little spring fever. That's okay though. He's got some details on a few financial filings that he did the heavy work and lifting for you guys. So we'll get into that. For today's show, we're going to go through our difficulty update, and then we're going to go through what were we doing next for that?
I was going to try to fake it till I make it. You just called me out publicly. I was like, yeah, I'm well. You're like, no, actually, Matt's been sick this week. He's looking bad and he's feeling bad too.
Okay, Jamie, cut the last thing I just said out and then cut out what Matt just said too. Okay. So this week we'll be going through our difficulty update, and then we'll pop over to look at Bitfarms. They removed their CEO, and now there's a dispute, $27 million lawsuit. Not a small amount of money. We'll go through that. Then we're going to talk about mining stocks, ETF flows, and then we'll finish up with the Biden administration putting the hammer down on Mine One, a Chinese Bitcoin miner out of Wyoming. That was the what should we say here? In the centerfold of the New York Times a few weeks ago. So we'll go through all of those things and more. Okay, Matt, let's first go to our difficulty update brought to you by the Blockspace Referral Network. This is a new referral network we're booting up at Blockspace this summer. So you can sign up now to get early access by clicking below in our show notes. It's basically a newsletter with a bunch of different service providers in Bitcoin and Bitcoin mining that I trust and use. Anything from like financial advisory all the way to treasury management, ASIC hosting, ASIC repair. So be sure to sign up below for that. Let's go into the difficulty update. I'll throw it to you. Bitcoin price is flat. We're like at 65K. So there's the table setter.
Yeah, so we're about halfway through the difficulty period. And it looks like the next adjustment thus far is going to basically be about flat. And like, what does this, I guess, mean in context? So we had an adjustment about a week ago that was pretty helpful for everyone. It was down about 6%. And since we've basically had fees are flat, price up a little bit based off of, I think, some of the ETF news stuff, which we'll get into, brought some happy sentiment back in the market. But hash rate's basically in the same spot. And so like you take it all together, basically hash price is up like just slightly. And there hasn't been much change at all in the past week, like just network data wise.
Yeah, not a lot going on right now. I mean, there's not a lot going on in markets right now either. I was just listening to another podcast on like Bitcoin trading, and which I normally don't listen to, but I was a little curious what they were thinking. And I think most people are expecting a very boring summer, which historically has happened in Bitcoin. So if you look at Bitcoin's price history, it's like sell in May, go away. Normally it's like choppy, kind of boring, not much going on. And then September is brutal. I think like 12 out of the 14 trading months for September, Bitcoin's history are in the red. And then October, we normally do pretty well. So I'm expecting this summer to be boring, and I expect difficulty and hash rate to translate towards that. The one question I wanted to throw your way was there was a nice prediction by James McCavity over at CoinMint, or Cormint rather. And he said that we're not going to have any more upwards difficulty adjustments through the end of the summer, or basically said we're going to stay flat. I don't know exactly what his words were. What do you think about that? Do you think we see like a lot of hash rate get placed online this summer?
I think it's probably pretty price dependent. Like if the scenario plays out that you just talked about, where basically we stay like at the same level, yeah, I could see that playing out, or maybe like slightly going up, right, as some of the newer ASIC models get shipped and that hash rate comes online.
Yeah, there is a lot of S21 pre-orders for Q3 and Q4, and I would suppose as it gets delayed a little bit. So yeah, going through the summer months, I'm expecting things not to go up that much. I think we have like 15%, 10% hash rate that needs to be worked back from the halving. So because we're already down from that much from the halving. So I think we're going to have to replace that hash rate. And then through the summer, if Bitcoin price isn't moving that fast, offline time from Texas heat, I think we're staying pretty flat throughout the summer for hash rate and difficulty. But up only will return shortly, and we could hit a zettahash by the end of the year. Could happen.
All the fee market demand stuff seems to be like it's really tamed too.
Yeah.
Like the L2s that a lot of VCs are pouring money into are very much in like a developmental stage. They're not taking up buying block space. The Runes crowd has really fallen off. Maybe it comes back a little bit. There's no like really quote unquote unique sats between now and the end of summer that could see like a whirlwind of bid. Same stuff basically, but that doesn't seem like it's going to cause any volatility.
No, I think that's good to point out. There's not a lot of stuff outside of Bitcoin like runes or ordinals that's expected to go crazy this summer. Now, last year in May, we did see a huge uptick in ordinals activity before a catastrophic death during the summer. And I think like ordinals activity dropped to like 1 to 5% of what it had been previously that year. Probably going to be a choppy, boring summer. Let's move over to this piece. We're going to do some mining stock updates, which we don't do too much, but given that there's no activity, that is actually something to talk about. And we also have some Bitcoin ETF information. There was some news about the Wisconsin state pension, I believe it was, which you can dig into a little bit. They're purchasing IBIT and GBTC. And I think what we're generally seeing here is that mining stocks are trading pretty flat. They're not really racing upwards, while people continue to allocate portions into these ETFs. And there's a lot more interest in these ETFs, even if the general flows in ETFs and Bitcoin price are not moving that fast. So first, this headline, and I'll throw it over to you. Quote, CoinDesk Markets, Bitcoin mining cost drops to 45K as inefficient miners exit. That's according to a JP Morgan note. And this piece, they just go through and kind of talk about how like the cost to mine Bitcoin has dropped a little bit as some of these more expensive miners are now out of the game post-halving, and the other miners are a little more efficient because they prep for it by, moving towards that 25 joules per terahash bench line that most people want. They're below 6 cents power, hopefully even lower. And this is very expected. This is the shedding of Bitcoin miners post-halving. For mining stocks, I'll throw up a chart in a second here. I think this shows it a little bit. A lot of people were de-risking their assets with mining stocks over the last 3 to 4 months, selling them instead of holding them because they didn't know what was going to happen with halving. And I think there has been that trade where people have been moving into Bitcoin ETFs, or people have picked up on them as opposed to touching mining stocks.
In the competitive world of Bitcoin mining, one name stands out: CleanSpark, America's Bitcoin miner. At CleanSpark, efficiency isn't just a goal, it's our standard. Our sophisticated facilities are built and led by expert teams who care about Bitcoin and the communities we work in. Scale, we've mastered it. Our large-scale operations have set us apart in the industry as examples of community-oriented building. Our track record speaks for itself. We navigate the complexities of the new economy with precision and with skill, continuously achieving operational milestones. Curious about how we do it? We invite you to discover the story behind CleanSpark's success at cleanspark.com.
I honestly think you covered mining stocks well there. So I'll move to kind of the ETFs. And basically what we've had happen yesterday, at the time of recording actually, was the time when 13F filings came out with the SEC. And what 13F filings are, basically investment managers that manage over 100 million in assets have to report exactly kind of their holdings to the SEC, kind of in the vein of transparency. And we found out a lot about the spot Bitcoin ETFs, which throughout the first quarter of this year, was the kind of story, right? It was, the halving, but also these ETFs launched, and man, are they getting a lot of flows. And so we have a better idea of kind of where those flows were coming from. We found that these investment managers with over 100 million make up about a fifth, about 20% of the total AUM in these spot products. So the majority of those inflows, right, were still very much so kind of the rest of everyone else, like largely retail. Although there was some kind of big heavy hitter bigwigs that allocated. I've got the number 2 RIA. RIA is a registered investment advisor, kind of the financial advisors in the US. Hightower, the second biggest one, made an allocation. Bracebridge Capital, who manages for Yale and Princeton investment desks, holds 433 million. Mass Mutual, who's kind of honestly the story that kicked off a lot of anticipation for institutional interest in Bitcoin the previous cycle, because they invested then. They're back around for round 2. They're a major insurance giant. They manage about 570 billion. Millennium Management made the largest allocation in the first quarter, close to 2 billion or 3% of its fund. And then the State of Wisconsin Pension Fund made close to $100 million allocation. They manage 156 billion. And Morgan Stanley. So interesting, like of the bigwigs, a pretty good mix, right? You have pension funds, you have insurance giants, you have hedge funds, you have RIAs all in there. And so a diverse kind of range of professional money managers making allocations to these ETFs, albeit in like kind of a smaller size. And the majority of the actual kind of attention and bid coming from general people like me and you, Will. That's what it seems. That's what the story looks like to me. What do you think?
We're just general people. It's cool to see that data. Like the fact that we can look inside who's purchasing these things and it's the people you want it to be. That's really bullish. And then I guess it's a little bit different than in the past. Bitcoin market structurally, you were typically looking at a lot of these retail exchanges, and then you'd have rumors of whales or institutions buying, not really till Michael Saylor. And then in 2021, the announcements of all these institutions buying Bitcoin, did that really hit the press? And most of the time it was for like the meme-ness of it, right? Where like an institution would announce that they purchased Bitcoin just because they wanted to see their stock increase a lot. And now we have like this more buttoned up institutional side that is putting it out in a more fair manner. I want to put up this mining chart on screen. This is from our friends over at the Miner Mag. Definitely go check out their newsletter and website. And this shows you how choppy it has been for mining stocks since the beginning of the year. There was a big sell-off in December, January, just kind of going into the end of the year, which is pretty typical for tax reasons. And then the beginning of the year, I think we went up a little bit, but for the most part, I think we went up for like 3 weeks there, you can see on the chart. But then it's been pretty much flat down only, with only a few mining stocks like CleanSpark actually beating Bitcoin price. Most of these mining stocks have not done so well. And there's two reasons for it, right? One is people putting money into Bitcoin ETFs. And two is because of dilution, especially some of these larger mining stocks. CleanSpark, Marathon, I believe Riot has had some, I believe Bitfarms has had some. They've all diluted shareholders, which is part of the mining stock game. It's part of the mining game. You're racing against difficulty and you use equity sort of as like a lever to keep growing. And you can see that clearly reflected in the chart. Now, I think what mining stock traders or investors are looking for going into the rest of the year is, can these companies pivot out of the halving, showing that they've been successful, that their revenues are still intact, that their margins for mining Bitcoin are still really, really strong, and perhaps show a rebound going into the fall. Especially if Bitcoin price goes up, then they're in a very, very good spot. Of course, they're racing against difficulty still. That treadmill never turns off. But I do think that there is a lot of light at the end of the tunnel for these mining stocks.
The typical mining gold rush phase, where price just rips and exceeds hash rate, and the ability for mining companies to build out facilities and procure ASICs and get the transformers and the equipment to get everything up online. That hasn't happened. We haven't seen it. Is the mining cyclicality thesis, is it waning? Is it no more? Maybe we should do an episode on that soon.
That's a good question. Leo Zhang is one of the great authors of that piece. I think we did a newsletter on it in January talking about the 4 different phases of the mining cycle. And yeah, I would suppose that we're like in the rising bull, so to speak, right now, perhaps not in the gold rush, though there is a lot of purchases of equipment behind the scenes. We had Taras Kulik from Sunnyside Digital on the show on Tuesday. Definitely go back and listen to that show if you're interested in ASICs infrastructure and demand supply side of the market for Bitcoin mining. He said that there's a lot of idle capital waiting to be deployed, basically seeing who flinches first or blinks first. So we might be there shortly, Matt.
Need ASIC help? Check out Vitamine, one of Bitmain's certified repair shops located in Washington State with satellite offices in Colorado, Oklahoma, and Texas. PSUs, hashboards, immersion setups, in and out of warranty repair, Vitamine has you covered. Want to train your technicians? Bring Vitamine to your site for hands-on training in the art of ASIC repair, complete with Bitmain AMTC certification. Contact Vitamine today at dan@vmasic.com. Again, that's dan@vmasic.com. When you think of ASIC repair, think Vitamine.
Let's go to our last story for the week. This is a pretty big one. CoinDesk policy: U.S. blocks China-tied crypto miners as national security risk near nuke base. President Biden ordered a halt to the Mine One operation near Warren Air Force Base, citing Chinese ownership, foreign technology, and proximity to strategic missile base. So this was a 75 megawatt Bitcoin mine in Cheyenne, Wyoming. It was profiled by the New York Times, I believe earlier this year, maybe late last year. We definitely covered it on the show. And the point of the New York Times article was, hey, why is there this Bitcoin mining site with ties to the Chinese Communist Party near one of our strategic nuclear bases for missiles in Wyoming? I think, if I remember correctly, that Microsoft originally tipped this off to the DoD, and then it went through the whole food chain. And now we have the Biden administration forcing its hand using an executive order to force a sell of this site. At the same time, CleanSpark also announced that they purchased a site in this area for the same megawatt size. It has not been confirmed who purchased this site or what happened with this site, but there's certainly been a lot of speculation that CleanSpark was able to pick up this site for cheap because of it. A few details that are in here that are really interesting. One, the infrastructure ASIC side of things. The note from the Biden administration said that they don't like that there's a bunch of Chinese technology and parts on site. And so I think they even said that they need to level the site and get rid of all that tech. But if you work in Bitcoin mining, you also know that all the tech comes from China, and it does one thing: it mines Bitcoin. So I think there's a little information gap there, or maybe just a little political posturing. A few other details are interesting. Microsoft kind of getting its way with this and fighting back against it, but a Bitcoin miner getting back in here and getting a Bitcoin mining site on the cheap. It's very hard to come across large sites right now. And I don't have the dollar per megawatt cost in front of me, but the number I saw floating around earlier was fairly cheap. So hard to do that. Matt, I'll throw it over to you for your take on this one. I do like getting these geopolitical stories. I feel like they're coming fast and furious at this point.
Yeah, I mean, even last week we talked about the bills that were came about through the Senate in Arkansas, right? And there was a China slant to that, basically them saying they didn't want foreign ownership, specifically citing China for the mines in the state. I'm actually going to take a pretty optimistic slant on this one. I feel like if this was an AI data center, the U.S. might have had the same reaction, and that they're just kind of trying to be extra careful around national security, right? And around ballistic missiles, right? For probably good cause. I mean, we know that, transformers and ASICs like don't have espionage like capabilities. I guess like what they're trying to be careful about is if there's other technologies that the company could be sneaking onto the property, that could be surveilling the area, right? That could give them certain kind of information that in accordance with what the CCP that is plans might be. So I don't know. It's definitely interesting. It sets precedent. Good for CleanSpark to be able to basically scoop up a cheap property.
It's not confirmed, by the way, but
Okay.
Most likely. Okay,
good for whoever it may be that could get a site for cheap. But yeah, I think that this would happen if it wasn't Bitcoin mining. I think that the US is just kind of weary, especially now in kind of a pretty tense geopolitical environment of kind of foreign powerhouses around military bases in the US. What do you think?
I think there's a Bitcoin side to it too, where a lot of people don't know what Bitcoin is still. They still get freaked out by it. I mean, you can ask someone walk on the street, is Bitcoin private? Or can you see people's transactions? And they'd be like, oh no, Bitcoin's like totally private money. And I think you get that within these administrations as well. Like they're huge, they're bloated, government, they're going for effect. There's a really good headline going to election year where, there's a lot of hawks who want the Biden administration to be a little harsher on China. And now they have a great headline. They forced divestment of what is a pretty small mine in the grand scheme of things, 75 megawatts. But it looks really good in a headline. So yeah, great wheel keeps spinning. We will keep covering these topics as they occur.
Last story of the day, Will. $600+ million publicly listed Canadian self-hosted mining Bitfarms has trouble in paradise. Former CEO and president, let me get his name right, Jeffrey Murphy, is bringing on a lawsuit for $27 million for a breach of contract against his former company. What do you think about this one?
I want to show you the stock price first.
So show me the stock price. I mean, add a little fuel onto the fire post-halving. I thought lawsuit season was over in the Bitcoin mining sector. Nope.
There's always more going on, especially in the executive circles. So their mining share price, their stock price dropped from like $1.70 to $1.50. It's since rebounded. What do I think about this story, though? So they've had a few executives in the spot. I believe that the current CEO, now former CEO, took his spot in 2020. He's been leading it since then. Bitfarms had an interesting time since 2020. They took on a lot of debt. A lot of people forget about that. They were one of the few Bitcoin miners we were looking at on this show and be like, can they get out of this debt crisis? That debt was coupled with rising interest rates, the fastest interest rate hikes in U.S. history. We went to 5% very quickly. While Bitcoin price was going down, mining economics were looking horrible. Depreciation of ASICs and infrastructure all over the place was also occurring. So it seemed like a perfect meltdown. Luckily, Bitfarms was able to pay off its debt pretty quickly. And I believe they were able to come to some negotiations on the debt as well. And they've come out of the gun in 2023 really looking sharp, like a strong team.
They also bought a ton of ASICs at
T21 purchase, one of the largest T21 purchases. I believe it was like $80 to $90 million. And then they've expanded their hosting quite a bit as well in South America and in
Paraguay? Is that right? I think maybe Argentina too.
We're showing our ignorance of this one specific mining stock,
I'm
but
pretty sure.
let's just say that they're doing pretty well in terms of like scoreboard for 2023, 2024. So I did not expect to see a shakeup with the executives. Now, for like the details for this, they basically moved him to the side in March, April, and then we thought that they're going to appoint a new CEO this May. Then the lawsuit came out, and Bitfarms fired him because of the lawsuit. And now there's a $27 million lawsuit against Bitfarms for wrongful termination. And I believe like also not getting compensated correctly. And so that probably comes down to like the stock equity plan, investing, all that kind of thing. This is a very big distraction. $27 million is a lot of money for any company, let alone a Bitcoin mining operation. You could say that is like, a third or a fifth of their ASIC purchase of T21s. Does this go through? It's hard to tell. We have some precedent here. Similar things have happened with Marathon Digital in the past. Things have happened with other mining stock or mining companies in the past. So we will have to wait and see. I'm sure we won't be able to get anyone from Bitfarms to comment on this one though, because these things are always a little bit dicey since they're in courts.
Rain or shine, will bring the news.
We're always here for the news. The second day takes, though they be stale sometimes, we do bring them to the show. Any more details you want to add to that one, Matt?
I'm good. Let's close out the show.
I got to fact check myself. Morphy joined Bitfarms in 2020 as president and COO and was promoted to CEO in 2022, taking over from the former co-founder Emilio Grotsky. So there you go. Their Q1 financial results are also due pretty soon here. So maybe more information in there. We can close out the show until next week. This has been the news roundup for the Mining Pod. You can listen to us on the Mining Pod feed directly. Just search in Spotify, Apple, wherever you get podcasts, the Mining Pod, or you can listen to us on the CoinDesk Podcast Network, CoinDesk TV, the Blockspace YouTube channel. And guess what? We're even just posting straight on Twitter these days. So if you follow the Mining Pod on Twitter, you can get it. It's actually a pretty good experience these days. You get the bookmarks, you get the timestamps, you get the social engagement. So we're everywhere. Go check out the Gwart Show and Bitcoin Season 2, our two other podcasts from the Blockspace Media. You can find those on blockspace.media. Go subscribe to those as well. Matt, hey, we'll see you next week.
I'll see you, Will.